Good morning, Mark Soderberg with ADM Investor Services with your morning ag market update. Mixed trade here overnight. Corn right now is 1 to 2 better. Soybeans are 1 to 2 lower. Mixed here in the products, up a little bit, and the meal down a little bit, and the oil also mixed in the wheat. Chicago is steady to a penny lower, while both Minneapolis and Kansas City are 1 to 2 better. Fresh news, somewhat scarce as we move into holiday mode. We get another export sales update later this morning, which covers the week ended November 27th. Yesterday, we got several flash sales from the USDA, which included beans to China and to an unknown buyer. Also corn to Mexico. We also saw the cancellation of 132,000 metric tons of white wheat to China. This sale sat on the books for less than a month. Bean sales to China are believed to sit right now at about 7.5 million metric tons, getting closer to the 12 million metric tons China reportedly agreed to purchase from the U.S. in late October, with Chinese offers running 50 to 75 cents below U.S. here in Q1 of next year. I suspect that sales to China will come to a screeching halt if and when we do reach this 12 million metric ton level. We got another CFTC update yesterday afternoon, which showed both money managers and index funds were net buyers across the ag space in the week ended December 2nd. During that week, money managers were net buyers of 34,000 contracts of corn. This flipped their position back around to net long 23,000 contracts. Right now, we would estimate that speculators are still long about 15,000 contracts of corn, 170,000 contracts beans, 45,000 meal, while short 55,000 contracts of wheat and 20,000 bean oil. Yesterday's EIA data also showed a record amount of ethanol was produced last week at 332.5 million gallons. This is above the 325 from the previous week and well above expectations. Corn usage likely reached right around 112 million bushels, and that is above the pace needed to reach the USDA usage forecast of 5.6 billion bushels. After briefly dipping below its 100-day moving average earlier this week, March corn did hold above its November low as U.S. demand remains strong. The 435 to 455 range remains intact for now. Near-term resistance is at the 50-day moving average at 443 3/4. Mostly favorable weather in South America has put most rally attempts here above the 450 level. That said, however, southern to southwestern third of Argentina, that area has turned dry and will be in need of some moisture by early January to prevent some yield-threatening stress to set up. Inside trade for Jan beans, prices have closed lower now for 4 consecutive sessions. I still sense that the path of least resistance is to the downside with the growing production prospects in South America. This while the USDA export forecast likely 50 to 100 million bushels too high despite the return of China for U.S. soybeans. I would not be shocked if we trade back down to the mid-October lows here near the 1020 level in the next couple weeks as speculators shed length before year-end. For now, spot oil has rejected trade below 48 cents a pound. January meal has bounced here this morning after briefly dipping below its 100-day moving average overnight. Wheat, I'm trying to find a bottom here as prices have been pressured by higher global production and stocks. March Chicago is down another 2 cents here this morning, and down another 2 cents relative to March corn, down to a 64-cent spread. And that's the lowest in over 2 years. Still waiting to see if we can find peace here with the Ukraine and Russia to what is now nearly a 4-year war. Thanks for listening, everyone, and I hope you have a wonderful day.